So that is how today ended up playing out. Very much in alignment with the bearish scenario that was discussed in the morning video. And now as we head into the overnight session and tomorrow, our short-term bias will now get paired back to neutral again. So instead of neutral bullish, we're going to switch that now to neutral. And on the downside, in the overnight session, buyers can still technically be active at 57.10 to 24. And if this bearishness is going to now remain in play, then we want to see the market holding below 39 to 43. So holding below 39 to 43 would be a bearish indication. And then if we can take out 57.10 to 24, that would serve as a bearish confirmation. And that can then open the door for a move back down into the support areas below and possibly the swing low at 56.49 to 59. And then that is, you can see a multi-day balance area low where buyers are very likely to defend and be active. So given today's bearishness, our short-term bias is being paired back to neutral. It's not necessarily flipping to bearish. So it means that we should not be overly aggressive on the short side. Just because we've seen one day of weakness does not necessarily mean that we should now get overly ambitious on the short side. I think a neutral bias is the prudent approach over here. And if this sell-off is going to remain in play, of course, the ideal situation would be that we hold below the bull-bear zone. Holding below that area would be a sign of weakness. But even if we get a bit of a retracement or a bounce, it's relatively low odds that we're going to just reverse back up, right? So even if we bounce back up into 76 to 82 or the broken support at 57.90 to 92 or the broken initial support, you can see this whole area is now going to be important resistance. So we can use 57, 89, 75 to 5875 as key resistance on the upside. And if the market is truly weak, we should not even go back up there. Even retracing back into 57, 89, 75 to 5875 would be a red flag in and of itself. A weak market should not put in that big of a bounce. Could we bounce to perhaps the breakdown area around 73 or so? You can see there's a low volume node right over here that marks an intraday breakout continuation. Could that be tested? Maybe, possibly, ideally not. But if we bounce back up into the top of the bull bear or even 71, 73 and then hold below it, then there's still potential for downward continuation. If sellers are really in control, then ideally you want to see the market holding below 57.39 to 43. So holding below this area would be a bearish indication, which can result in a test of 57.10 to 24, where buyers can still be active on first test. And if we take that area out, then we have a bearish confirmation, and we can end up expanding the range lower into 56.9775 to 57.0375, and eventually the 56.49 to 59 area, where buyers can still defend, especially on first test. So those are the ideas as we head into overnight.